Welcome back. You are tuned in to Traders Nation. My pleasure to have with us here today Walt Vieira. Mortgage Secret, 6 steps to the lowest rate and closing costs guaranteed. Walt, welcome to Traders Nation. How are you today?
Good. I'm doing great.
Hey, Walt, in these markets, how we are here today, a glut of houses on the market, a lot of different types of buys, and people might be coming out and starting to pick some of those buys up. What would be the number one question that consumers, they should be asking their mortgage company before they choose to use them? What should that be?
You know, there's a lot of questions, right? I mean, the first question that most people come up with is what's the rate and what are your closing costs, which is a question that a lot of loan officers are expecting you to ask, and they're prepared for that question.
Yeah.
And a lot of them will try and spin it. But a question that they're not prepared for is this. You need, as a consumer, this is the question I would want to ask.
Sure.
What and how do you track your interest rates?
Yeah.
And if the loan officer gets that question, they're going to have one of two answers. And the first answer is the one you want to avoid. And the answer is, well, we get rates on a daily basis, and as rates change, we'll notify you and keep you apprised of what's going on.
Sure.
Well, that's not what you want to hear. What you want to hear from a lender or a loan officer is something like this. Well, we subscribe to a service where we're notified about an hour or so before any rate changes go on. So if I see that rates are going to get better, well, I'll let you know, so that may be a good time to lock in advance. Or, hey, you know what, rates are going to, looks like we're going to see a rate change here shortly, so you may want to consider locking in your interest rate.
Right.
So we subscribe to a service. That's the company you want to do business with, because then you know they're serious about what they do, and they're not just shooting from the hip and reacting.
All right. Now, Walt, if there is a change, let's say they don't let you know that. One, they may not know the exact answer to that, or two, they don't want you to know, because what would they do? Is there a difference that they would actually take in pocket that's part of their bottom line?
Very good point.
Yeah.
Very good point. If they see that rates are going to get better, and they don't subscribe to one of these services, and they're not upfront about that, well, then that's exactly what they can do. They can see that rates got better a little bit, and maybe they're talking to you about, let's say, for example, a rate of 5%.
Right.
And if rates got a little bit better, that means that 5% is paying that company a little bit more now, but they're not going to pass that savings on to you. So you want to, in my book, I show you how to make sure that does happen.
Sure. All right. So you talk about in your book, too, that let's say 5%, that's a great rate compared to 6, 7, 8%. 5% seems like a good rate, but you say that consumers may never get the best rate. Is this what we're talking about?
Yeah, that's exactly what it is. Well, and if you think about it, consumers that go out, and we're all taught, well, not really taught, this is what we hear from our friends and relatives on how to shop for a loan.
Right.
Go out and get a couple estimates. Well, the problem with that is that if you go to one company and they have a history of overcharging and to consumers, and then you go to another company, and they do the same thing, are you getting the best rate? You're not. The only thing you're doing is picking the lesser of two evils.
Right. Now, points, let's talk about that. A lot of consumers don't know this, is they can actually go in and negotiate points on some of these mortgage lenders. What's the best way to accomplish that?
Well, and that's why I wrote my book, is to actually walk you through exactly what you need to do step by step.
Right.
But points, used to be thought of, you know what, don't pay any points. When you go shop for a mortgage, make sure you tell them you want no points. Well, that's not the case anymore. It's probably a good idea that you pay at least one origination point, because the difference in rate nowadays between paying an origination point and not paying an origination point makes a difference in your rate.
Right.
So it's something that consumers need to understand, that the market has changed. Not only that, but there's more to it than whether or not you should pay a point or not, because lenders are paid in regards to yield spread premium as well. So there's more to it than asking them about points.
Yeah, now, Walt, seriously, a lot of companies, for instance, Bank of America, one of them, and I'm not endorsing Bank of America, folks, I'm just using this as an example, where they may have 0 points to several points, and then maybe a lot of point products in between. So you're absolutely right. 1 point could cost you $3,000 in origination fees. Let's just say that as a dollar amount example. Versus the life of a loan, you may be paying thousands and thousands and thousands of more dollars just in interest alone. So it may be worth paying that 1 point or whatever it may be, correct?
That's exactly right. And you know what? It's up to your loan officer to be able to show you
Sure.
the difference in that. If they can't show you the difference in that, that's another red flag in who you're dealing with.
Right. All right. Now, this drives everybody crazy, and I get a lot of questions on this. When you get your original loan rate, let's say at 4.75%, and you're locked in at 4.75%, but when you go sign those docs, it says your APR is 4.95%. Can you explain the difference to everybody?
Sure. The 4.75, that is your note rate. That is the rate that you're paying over the life of the loan.
Right.
The APR, as you said, it's disclosed as on the truth in lending form.
Right.
And every lender has to disclose that to consumers. And what that does is that takes into account certain closing costs that you're paying on that loan.
Yeah.
So that's the actual cost for those closing costs over that first year period of the loan.
Right.
But your note rate, if it's 4.75, that is your interest rate. But because there's closing costs, those need to be factored in.
Right.
And the government came up with this, HUD came up with this as a way for consumers to be able to compare one company versus another.
It drives everybody crazy. Like, oh, wait a minute. They put on the brakes. They start getting fuming, and then it drives the doc people crazy, too. When it's like, okay, like, here we go again. The number one thing that I have to explain on every loan closing that I do, right?
That's exactly right.
That's unbelievable.
That's exactly right.
It's unbelievable. All right, Steph, should we be asking our realtors any advice on regarding home financing?
No.
Okay, how come?
And the reason why
is
because if you think about it, realtors, they're trained on everything as far as finding you the right home and dealing with inspections and negotiating that. But they really have no training at all in regards to mortgages and interest rates.
Right.
But what they do is they align themselves up with several companies, and they're all trained to do this, that they think that are reputable companies.
Right.
So as far as that goes, maybe. But what they're not going to do is go out of their way and try and help you negotiate the lowest rate on your loan.
Right.
They're going to say, you know what? A lot of times they're going to say, go to this company or this company, and they'll take care of you. And in their head, they're thinking, you know what? As long as the deal gets done, that's all I care about.
Right.
That's all. They're not going to be able to decipher one closing cost estimate versus another.
Right.
So you got to know that just because they're recommending this company, they're recommending them just because they're able to get it done, not because it's in your best interest.
That's exactly right. And good or bad, they will refer you to people that will get the deal done. And after all, that is in the realtor's best interest, right?
That's exactly right. It comes down to the money.
All right, comes down to getting it done. All right, now, buying a home, is now the optimum time to buy from a home builder?
You know what? The best time to buy from a home builder is at the end of their quarter.
Oh.
That is a great time to buy, like Pulte Homes, D.R. Horton, and there's other lenders, publicly traded companies. At the end of their quarter, that's when they're really looking at trying to sell their homes. So it's the best time because they are willing to negotiate because they don't want to have those on their books. So at the end of the quarter, at the end of their fiscal year is another great time. So if you can time it and on those dates, then that's what you want to do because you'll get great deals.
I think that's a fantastic idea because you're absolutely right. These public companies, Beezer, another one, they need to show good numbers, if not improved numbers. I know Beezer just had a report out that their numbers are absolutely fantastic compared to a year ago. So they just had their earnings reports out, and I think that's a great idea. So good deals at the end of the quarters, maybe even better deals at the end of their fiscal year, and everybody needs to know this. Every corporation's fiscal year doesn't end on December 31st. Sometimes they swing in the middle of the year, right?
That's exactly right. And you know what? You don't be afraid to go in and negotiate with the builder. I mean, they have their prices, but if you have a realtor that's representing you, they should know that they can negotiate those prices. Builders nowadays are not expecting you to come in and pay what they're asking on that home. They're expecting you to make an offer.
Right, all right. And with no doubt, in this economic times, and the housing industry has taken a beating, it is a buyer's market, right?
It's a terrific buyer's market, and it will be probably for quite some time. But now with the tax credit,
sure,
if you're a first-time buyer,
right,
and then also the new tax credit for people that have owned their home,
right,
along with low interest rates.
Right, it's optimum. All right, Walt Vieira is with us here today. Name of the book, Mortgage Secrets: 6 Steps to the Lowest Rate and Closing Costs Guaranteed. Walt, thanks for your time.
All right, thank you.